Hi, today I want to talk about the group term life insurance, which is usually provided by your employer. So usually, your employer will pay the premium on the group term life insurance as a benefit to you. Many people may think and say, oh, okay, my employer pays the premium, so my group term life insurance is free to me, so it's a good benefit to you. So, um, so that's the something I want to discuss here. Your employer may pay the premium for you, but you have to pay tax on the policy. So I'm gonna show you how it works. Let's say this is an example. Mike is the manager of a company A, and he is offered a $1.1 million 10-year term group life insurance policy, which the premium is paid by his company. Assume Mike is married and lives in California. Let's see quickly, let's just say this is the fact information about Mike. So annual salary is $200,000. So this give him the federal marginal tax rate is 24%. The state's marginal tax rate in California is 9.3%. FICA tax, which is for the Social Security and the Medicare, because his salary is higher enough, so that no need to pay the Social Security tax on the marginal amount. So then he just had to pay the Medicare tax 1.45%. So that's so added two together, which is give Mike the marginal tax rate is 34.75%. So this is the information I need to show you how do you calculate the tax on the life insurance. So quickly, just to show you if Mike's annual salary is $200,000, so that's why it's $24,000 24% marginal tax rate. So this is for California is give him 9.3% marginal tax rate. So this is the something I want to show you. The amount of the annual tax Mike has to pay for this policy, life insurance policy based on Mike's age. So I just want to quick show you. Say if Mike is the age is between 55 to 59, so the amount of tax he has to pay on this policy is $1,883. If his age between 60 to 64, the amount of tax he pay on this policy is $2,900. Then age is between 65 to 69. This is the tax pay is 5,560. If he is above 70, so that is a significant amount tax he has to pay on this life insurance policy, almost $10,000. So that's something is here is the amount of tax he has to pay based on different age. I'm going to show you how to calculate the tax. So how to calculate the tax on the policy, I will show you how to calculate the tax on Mike's group term life insurance for the age group 60 to 64, 65 to 69, so that you will know how to calculate the tax on other age group. So I'm going to show you. So this is how to calculate. So Mike's age is between 60 to 64. So the taxable income, so this is 8,316 is gonna be this is amount of taxable income contributed by the term, the $1.1 million term group term insurance. So this 8,316, this number should be on your W-2 form, text form. Then you look for the box 12C. So this number should showing up on your W-2 form, so that you know this is amount is contributed by your group term insurance. Then all those number behind of this is show you how really calculated. This formula is given by IRS. So I quickly walk you through. This is $1.1 million. That's the death benefit of the life insurance. Then minus $50,000. Why is it $50,000? $50,000 is exempt from tax. So based on according to IRS. So then you divide by 1,000. So you divide, that's given by IRS. Then you times this. This is called 0.66. It's a factor you need to use it to calculate this amount. This factor increase based on your age. So I will show you how that increases. So then you times 12. This is the formula given by IRS. Then how to calculate your taxable amount. I'm going to show you on how IRS. This is the IRS form. This is the IIS publication 15B. So this is the form. Then I'm just going to show you. You can look for this publication 15B. So this is year 2021. This is page 14. I will link the link underneath all my videos. So then you can access that, so you can find that online yourself. So I want to just quickly show you that. See, you hear exclusion from the wage. You can generally exclude the cost up to 50,000 of the group term life insurance. That's why I minus $50,000, $1.1 million minus $50,000. So that's why here. Then you can see they will tell you anything above $50,000 coverage. Then this will be reported on your wage W-2. That will tell you is box 12. Then its code is C. That's why it is in the box 12. Look for on your W-2 form, look for the box 12 and C. So that will give you amount. It's the taxable amount contributed by this life insurance. Really how you calculate it. So this is the table that will show you. They also give you a quick example here. Let's say Tom is this person, is 45 years old, so have a life coverage, insurance coverage is $200,000. So you can see the formula here that tell you is 200. Basically it's 200,000 minus 50,000. Then you divide by 1,000. That gives you 150. So this is 150. Then you times this is a factor 0.15. Well, 0.15 from, you can see this. I don't know if you can see, this is 45 to 49. He is 45 years old. The factor is 0.15. That's why. Then you times 12. So this is how you calculate. This is that's why I showed you the formula. This is given by IRS. That's how you calculate this. Then once you have the taxable income, if you don't have this insurance, then your taxable income will lower by this amount. Since you are increased by this amount, so this amount should be taxed at your marginal tax rate. So that's why earlier I calculated 34.75% is Mike's marginal tax rate. So you're gonna pay tax on this amount at your marginal tax rate, which give you 2,900. So this is amount of tax you have to pay for this group term life insurance. Then I'm gonna quickly show you if your age is between 66 and 69. So I showed you earlier this factor is increased based on your age group. This factor from 0.66 increase to 1.27. So this is increased your taxable income to $16,002. This is a lot. This is a lot increase. Almost this is double your taxable income. So same thing. This probably when you are 64. You from 65 to 64. So then you're gonna see dramatically your tax increase just due to this life insurance. So yeah, once you know this taxable amount, taxable income times your marginal tax rate, that give you tax amount you have to pay for this life insurance. So yeah, since we talk about the factor, this is Iis Premium Table. So that's earlier I showed you on the IRS form. So you can see here, actually, so this one is 65 to 69. So anyway, so I just want to show you the factor here. If you are young, if you are young, 25, in your 30s, in your 20s, even, in your 30. So that's the factor is pretty low. So basically, so that's your taxable amount will be lower too. So that's fine. But if you are young, if you are getting older, especially if you in the 60s, then you suddenly from 64 hit 65, this factor just doubled within a year. So that's just will double your taxable amount. So you can see your life insurance death benefit is not changing, but your taxable amount doubled. So that's the cost to you. So especially then when you hit 70 years old, you can see this factor almost is 2. It's 2.06. So that's why you're paying more tax on your same life insurance. So that's just something you should know. The older you get, the more tax you have to pay on your life insurance. So anyway, so that's so when you I want to point out is if you are still working at the company, that's the amount, the higher your income, then the higher your marginal tax rate, the higher you're gonna pay on this life insurance. So if you do retire, I believe some of the policy you can take with you, then that time you have to just pay the premium by yourself. Then you do not pay tax on it. So you have to wait on how much the premium you're gonna pay, how much tax you're gonna pay. So anyway, so that's just something you have to look at detail yourself. The question is, do you need a life insurance at age 60? So really, should you use your, employer group life insurance, or should you go outside and buy one yourself? Well, this is something I use online life insurance calculator. So they basically show you how much does life insurance cost. So this basically says if you are aged at 60, you are male, you living in Los Angeles area, then this is a 10-year term policy for death benefit of 1 million. So this is gonna cost you the monthly cost you based on your health. So that's a different level of the health: best health, good health, average health. So here on the right side, I'm showing you the annual amount. So you can compare this premium you are paying for you get on the market to the group policy you paying on the tax. So if you are in the good health, the best health, you may be, it's maybe beneficial for you to go outside buy policy yourself. But if you in a bad health, maybe you should stay in the group term life insurance, especially if they don't do medical examination. So you do not to prove your insurability, especially if you have a bad health. So group life insurance is beneficial to the people in the group who have bad health. So if you are healthy person, maybe it's not a good deal to you stay in the group life insurance. So that's something. So I also show you if you at age 65, so that's uh, if you go outside buy a 10 million 10 years term life insurance, this is monthly cost to you. So this is on the right side is annual amount. You can compare the annual premium amount to the tax you have to pay on your term life insurance. So again, if you are in a good health, you are a very healthy person, maybe it's beneficial for you to buy a life insurance on the market rather than staying the group term life. And so that's just something you should know. Then also you have to think, because I use Mike's annual income is only $200,000. So what if your annual income is $500,000 or even higher than that? That just give you very, very high marginal tax rate. So which means you pay much more on your term life group term life insurance on the tax. So yeah, this is something you need to consider when you to choose. So on the bottom line, for this one, you need to know your employer paid group life insurance is not free to you. So this is very clear. If you only insure the amount is only $50,000, that's good. That's good for you. So if you are single living by yourself, so you don't need a life insurance, so don't go to buy $1 million life insurance from your employer, the group life insurance, just because you think it's free. It's not free. Okay, it's not free. You pay a lot of money on it, so just don't do that. If you don't need one, don't buy, don't get one. You can get up to $50,000. That's fine. So don't get more than that. If you need one, so then you have to compare. Really is beneficial for you to get a life insurance outside, or if you should stay in your employer group term life insurance. So that's something I want to show you here. Okay.